I won't do that. Okay? Now everyone's saying, oh, good. That's probably the biggest statement I made, because people thought I would use force. I don't have to use force. I don't want to use force. I won't use force.
After days of escalating threats towards Europe, President Trump walks back tensions with a vow not to use military force or tariffs to seize Greenland, though he still wants control of the Danish territory. Markets are thrilled as the so-called taco trade prevails once more. Live from Sydney, I'm Paul Allen. This is Insight, where we dive deeper into the stories that matter with crucial context and sharp analysis. With the global stock rally getting a further push from surging semiconductor stocks, helped by comments from Nvidia CEO Jensen Huang in Davos, he says the global AI build-out will require trillions of dollars of investment. And those gains helping the tech-heavy South Korean stock benchmark across the 5,000-point target, which was set by President Lee Jae-myung, as the market becomes a key beneficiary of the AI boom. ARK Invest Chief Futurist Brent Winton is going to join us with his outlook for the AI-driven stock rally and in which markets he sees the most gains. Plus, more big voices out of Davos, including White House Economic Advisor Kevin Hassett, the CEOs of BHP and Mizuho Financial, as well as the White House Special Envoy Steve Witkoff. Tacos are back on the menu. Asian markets marching higher today following Wall Street's gains as the S&P 500 erased losses for the year. President Trump backing off on his tariff threats against European partners over Greenland, taking some heat out of the renewed trade war concerns. We're also keeping a close watch on Korea's benchmark Kospi index after it touched the 5,000 level today for the first time. Korean stocks getting a boost from AI-driven demand in its tech-heavy market. A close above 5,000 would meet a target set by President Lee Jae-myung, who said yesterday he thought the nation's stocks were undervalued. Well, let's get more now on our top story. President Trump saying he'll refrain from slapping fresh tariffs on European nations that oppose his bid for control of Greenland, citing a framework for a future deal.
It looks like we have the concept of a deal. It gets everything we wanted, including especially real national security. Well, the deal is going to be put out pretty soon, and we'll see. It's right now a little bit in progress, but pretty far along. It gets us everything we needed to get. It's the ultimate long-term deal, and I think it puts everybody in a really good position, especially as it pertains to security and minerals and everything else.
But NATO Secretary-General Mark Rutte says the talks with Trump did not include discussion over Danish control of Greenland.
That issue did not come up anymore in my conversations tonight with the President. We very much focused on what do we need to do to make sure that that huge Arctic region, where change is taking place at the moment, where the Chinese and Russians are more and more active, how we can protect that. That was really the focus of our discussions.
Well, for more on this, let's get to Bloomberg Deputy Managing Editor Balaz Pens. So, Balaz, no details of this framework agreement. Is there any discussion of what might be in it or when we might hear the content?
Well, Paul, we can deduce some of the content, and there's some reporting out there that kind of give us some clues about what might have been discussed, although, as the President said, these are still the concepts of a deal. This is a framework for a future agreement. It does sound like mineral rights have come into the conversation. That's something he mentioned. And also some of the reporting shows that there's a discussion over U.S. sovereignty or U.S. control over some small parts of land within Greenland, some of the lands that the U.S. military bases already occupies. It sounds like there might be some discussion over that, and we can deduce that there's some kind of security discussion between the other NATO nations and the U.S. ongoing about how they will defend, how they will fortify defenses in Greenland.
Are there any lessons here for European leaders about how to deal with President Trump?
Well, it seems like the whole discussion turned on the president's meeting with Mark Rutte, the NATO Secretary General. Just before that meeting, he gave a speech in Davos, which sounded very, very bellicose. He berated Europe. He talked about how much the U.S. needed to get Greenland, and there was no other option. And after that, he came out and sounded actually quite diplomatic, you might say. So it does sound like diplomacy prevailed, and that's kind of the best outcome the European leaders could have hoped for when they gathered in Davos in the hopes of kind of persuading the president to de-escalate a little bit, to lower the temperature. The tariff threat is now off, and now they're talking about working together in Greenland. That's beyond what everybody talked about before the whole discussion began in Davos.
All right, Bloomberg Deputy Managing Editor Balazs Pens there. Well, our next guest is an internationally recognised expert in Arctic security and geopolitics, including a focus on Greenland's strategic role. Marisol Maddox is Senior Arctic Fellow at the Dartmouth College Institute of Arctic Studies. She's also a member of the Council on Foreign Relations. Marisol, thanks so much for joining us today. And looking back over the events of the past few hours and indeed the past couple of weeks, do you get the sense that maybe we could have got to this point without all the threats and putting the future of NATO on the line?
Yeah, if you look at polling from about a year and a half ago or 2 years ago in Greenland, there was actually a very positive perception of the United States by Greenlanders. I think if that same polling was conducted today, you would see a very different outcome. Now, from the conversations that I've been having with people in Greenland, it seems like, they would look at increased U.S. interest and presence with the same kind of skepticism that they had come to look at Chinese potential investment and presence. I don't think that that's really something that helps to advance the interest that the U.S. purports to be pursuing in the region.
Well, as we heard from Balazs a moment ago, the rhetoric really seemed to change after President Trump had a meeting with the NATO Secretary General. Sort of raises the question of why does the US need to own Greenland in order to have a functional Golden Dome or any other defensive assets there, because it's essentially NATO territory anyway, and the US has already got an existing base there.
Yeah, so Golden Dome will be incorporating a lot of already existing infrastructure, adding some new infrastructure, some new sensors, a space component, a lot of trying to kind of create like a system of systems to be able to have a real-time common operating picture. So you don't have to own a territory in order to be able to utilize the resources that we already have, right? And this 1951 defense agreement gives us, an extraordinary amount of latitude. It's really, there's nothing driving a need for an actual acquisition. If anything, I would say that would, create a lot of problems for the U.S. And I would just note that, in terms of what any deal may look like, so far it seems like President Trump had spoken with the NATO Secretary General. If these conversations are not with the Greenlanders and with Denmark, I think it's even too soon to be really discussing it, because as a matter of sovereignty, they need to be at the table. And that's been the repeated message, right? Nothing about us without us.
Yeah, I want to circle back to the sovereignty question in a moment. But first of all, I'd like to explore the questions around the current state of Chinese and Russian interests in Greenland and the Arctic, because President Trump had pointed to this as being one of the reasons that the U.S. had to own Greenland.
Yeah, so we are seeing an increase in Russian and Chinese activity in the Arctic. Russia, of course, is over half of the Arctic, so it makes sense that they would be there. Chinese presence has grown. China has recently demonstrated new capabilities, being able to send submarines to very deep depths that really challenges American undersea dominance. None of this is around Greenland, right? So you have off the west coast of Greenland, that's the GI-UK gap, the Greenland-Iceland-UK gap, which is really important for being able to track submarines that come down from the Northern Fleet headquarters down into the North Atlantic. But, when we talk about, where we're seeing Russian and Chinese warships, they're not around Greenland, right? And we have Nordic intelligence that has verified this. The commander of the Joint Arctic Command, has explicitly come out and said that that's not what we're seeing, but NATO is keeping an eye out. And if there's any indication of any intention of hostility, there would be a NATO response because Greenland is a part of NATO. And actually, when we're talking about, what are the threats that we were seeing to Greenland from China, it was really more in the predatory economic domain. So 2018 was kind of the peak of the potential, the proposed foreign direct investment from Chinese state-linked companies in Greenland. There was a report that came out from the Center for Naval Analysis at the end of 2017 that really highlighted the amount of Greenland's GDP that these companies would basically have control over. And there was a lot of concern that that could be leveraged for policy influence by the CCP. And so the United States saw this, and we spoke with our Danish counterparts and expressed our concerns. There was agreement from the Danes, spoke with the Greenlanders. And so they ended up, there was a specific incident with these airports, this airport modernization, where a Chinese state-linked company was going to come in and pay for it. And so kind of this whole combination of the potential Chinese-linked influence, Denmark stepped in, they paid for the airport renovations, based off of just, a very positive conversation that we, based off a good relationship that the U.S. had with them then, and that we've had for such a long time. And we're able to really stop that. And I would say Harvard's Arctic Initiative just recently released a report that looks at the state of Chinese foreign direct investment and some of their interests in the Arctic that have largely been not successful. Where China has gained influence and leverage is in Russia. And that's largely also because of the lack of Russian partners after the 2022 full-scale invasion of Ukraine.
Yeah, well, it's a good time to make this comparison as well, because Russia has been comparing the U.S., quote, need for Greenland with its own need for Crimea. So what are the implications when we see these sorts of pushes for territories? Canada's Prime Minister Mark Carney correct? Is the rules-based order dead?
Yeah, so you see the way that Russia identifies certain dynamics that evolve, that it sees the ways that it can benefit, right? So anything that weakens NATO, they like, right? They want to create these, to identify these wedge issues and then use those to kind of egg on the way that they want this to go, right? They don't want NATO to be strong. And so I think it's really a slippery slope. I think there's a lot to gain from, recognizing the rules-based international order, even from an economic perspective, an investment perspective, just having, an environment that is conducive to more high confidence investing, right? And we saw this even with Russia back in 2019, where Danish intelligence found that they had actually forged a letter that was purporting to be from the Greenlandic foreign minister to Senator Tom Cotton, a Republican in the U.S., asking for help on independence. And this was, after President Trump had already said he was interested in buying Greenland. And so again, Russian intelligence kind of jumps on that and tries to wedge, create that wedge issue. But, this is, again, it's really, it's just something that creates opportunities for our adversaries. And really, because President Trump has said he wants to deter further Russian and Chinese aggression in the Arctic. We're all on the same page about that. And one of the ways that you can do that is also to give Ukraine what they need to win, because the lesson that Russia needs to take from the conflict with Ukraine that they started is that it doesn't pay to invade a peaceful sovereign country. And so if we can deter further aggression, we won't have to, have as much concern about them expanding the conflict to other parts of the world.
Well, let's talk a bit more about Greenland sovereignty. I mean, what does the agreement, and we're not sure what's in it yet, potentially mean for the Greenland desire for eventual independence?
Yeah, so again, I would just say that if Greenland was not involved in these discussions, then it's really not even worth discussing at this point. Greenland issued an Arctic strategy, which is their foreign policy and security strategy, just a couple years ago, or about, I guess in 2023. And that was supposed to go until 2033. And they're already having to kind of adopt that because of just the changes in the situation, right? So I mean, first and foremost, the recognition of their sovereignty, their right to self-determination has to be at the foundation for any type of agreement to go forward, to be able to look at all of the opportunities that we have to benefit, right? And I will also say here, Trump's pick for ambassador to the Kingdom of Denmark, Ken Howry, had really started to move us in the right direction. In early December, there was a meeting of the Joint Committee, which is a specific group that was set up to help to advance economic cooperation between the U.S., Copenhagen, and Nuuk, and especially with Greenland, though. And he came out of this meeting. They had a joint statement. It was all based off of respect for self-determination and the shared interest to pursue projects that would be mutually beneficial. That's really the way to go. And anything less than that, Greenland has made clear is a non-starter. Denmark is responsible for their security at this point, but Greenland has showed that they are, interested in staying, a member of NATO, even as they do pursue independence. Just because they're not fully independent doesn't mean that they're not sovereign, right? Because they have the Self-Government Act from 2009 that has given them more and more of their own authority as a country.
Presumably now, the price of independence would be an ongoing military presence from the United States. Is that a fair observation?
Yeah, absolutely. I mean, the 1951 defense agreement is still in place. It is predicated upon NATO existing. And it also, says in writing, with due regard for the fact that Greenland is a part of the Kingdom of Denmark. There has been interest in, from the Greenland side, to actually update that agreement to include them as a separate actual partner. Now, because of the change, this is agreements from 1951, and now in 2009 they have the Self-Government Act. So they have a new legal status now, and they really are coming more into themselves. They have a seat at the Danish representation to NATO in Brussels. They're engaging more in security matters. So I think that could be a positive part of how this agreement may be updated. But as it stands, if the U.S. wanted to build a dozen more bases, that's totally possible under this current agreement. In the past, the U.S. has had, about 17 bases, and it was the U.S.'s decision, because of changes in the threat environment, to abandon those.
All right, Marisol Maddox of the Institute of Arctic Studies at Dartmouth College. Thanks so much for joining us today. Still to come, positively disruptive U.S. economic advisor Kevin Hassett tells us he doesn't believe the Trump tariffs are driving U.S. allies closer to China. Our conversation from Davos is next. This is Bloomberg. Welcome back. You're watching Insight. US National Economic Council Director Kevin Hassett says President Trump's tariffs have been positively disruptive. Speaking to Bloomberg, Hassett also said he does not believe the tariffs are pushing US allies closer to China.
President Trump is disrupting an order that needs to be disrupted, and I think that markets are celebrating because of that.
Do you think that tariff uncertainty, though, we got a whiff of Liberation Day this week because of what was going on with Greenland, do you think we are past the most peak moment of tariff uncertainty for financial markets, for consumers, and for other countries?
Well, I think that the tariffs have surprised a lot of mainstream economists. I used to be one of those guys, at least on the tariff front, where I've been surprised, especially.
Now you're a true believer.
It's just astonishing that everything that's in the models that we were taught when I was in grad school just turned out not to be true. And we have, I think, a strong understanding economically of why that is. It's basically that if we have a trade deficit with China forever and ever, then by definition, they're basically dumping into the U.S. with inelastic supply. And so if we put a tariff on them, then they bear the tariff. And the same thing is true for Europe. If we have a big trade deficit with them for a long time, then they basically cut their prices in order to maintain market share in the U.S. And I think the question is, the interesting question that I've been puzzling over and talking to some of my mainstream economist friends is, why is this so positively disruptive? Has President Trump's agenda been so positively disruptive for Europe? And I think that one of the things is that he's made them lift their game in terms of restoring the global order by increasing defense spending. But also, remember, it used to be that we were always talking about zombie companies in Europe. We've kind of stopped doing that, haven't we? And I kind of wonder if the competition that's created by the tariff and the tariff uncertainty hasn't been a real shot in the arm for the European economy.
We've heard a lot of people on Bloomberg talk about that. Actually, what Trump is pushing Europe to do is to do what's good for them.
Right.
But are you concerned about any of these unintended consequences? We saw Spain go over and have a very cozy relationship with China last year. Prime Minister Mark Carney just went over to China. Then he came here to Davos and talked about how the world order that we know is dead. And if you are a middle country and you're at the table, you're going to get eaten. Is there potentially this consequence where we push our allies closer to China, which is the U.S.'s biggest adversary?
No, I don't think that's happening at all. And I think that what is happening is that people are learning, indeed the people here at Davos, that's one reason why we're here to spread the news, is that we've got all this analysis that says that Trump's plan is working. It's working both for the U.S. economy and for the global economy. And I think that people in the end, they look at their wallets, they see how it's going. And in the United States, they're going to see a couple quarters of 5% growth and booming markets, booming wages. And if they see that everywhere else, then I think that it'll have a big political effect. I think the people who make the most noise attacking President Trump aren't necessarily speaking for their countries. They're speaking for their very, very liberal policies. You've seen President Trump call some of them out the last few days.
That's National Economic Council Director Kevin Hassett speaking to Bloomberg's Anne-Marie Hordern at Davos. Still to come, we talk market strategy with Zuma Wealth CIO Terri Spath, who's advocating a back-to-basics approach and staying positive on gold. That conversation up next. This is Bloomberg. Welcome back. You're watching Insight. Here's a quick look at where markets stand as mainland Chinese markets head to lunch. Japan, meanwhile, returning from the break. And we've seen tech stocks catching another tailwind. Look at the Kospi go. It's better by another 2%. Part of the reason for this, some remarks from Nvidia CEO Jensen Huang at Davos saying that the AI build-out is going to need another, many more trillions of dollars to keep going. So that's provided a tailwind to those Korean tech stocks. The Kospi cracking at 5,000, which was a target President Lee set for the end of the year. We've got there already. Elsewhere, we've got a pretty broad-based rally off the back of the relaxation of the tensions around Greenland as well, and Japanese bonds making somewhat of a recovery at the long end as well. But we're getting a bit of a warning there from Ken Griffin of Citadel, saying the heavy selling of government bonds should serve as an explicit warning to US politicians to improve the nation's finances. And also we've seen a sharp rise in volatility in that as well. The Japanese banking giant Mizuho remains optimistic about Tokyo's fiscal stance despite this week's worried signals from the bond market. Speaking to us in Davos, President and CEO Masahiro Kihara also reacted to Japan's finance minister, telling us the government's budget plan is not expansionary.
Just throwing that out. The profile of the Japanese budget, fiscal policy, has been improving, number one. Mindset of the Japanese corporates has been improving, which means that you can expand the budget, right? And so I would say that, and also many figures are improving. So I would say what Katayama-san has said is right, but she constantly has to send a message that, they will be diligent on this.
The market's obviously not buying it because yields are surging.
Right.
30-year yields higher than bonds. Might that be a contagion effect? Might we feel the spillover?
It might be, but I think this discussion has to also come from what will be the terminal rate at the end of the day, right? And
what should be the terminal rate? What is the terminal rate?
You want to talk about the terminal rate? Okay. So I think what is happening right now is that BOJ has changed their stance moving into this year, I think. So previously, I was thinking that the terminal rate might be the lower end of 1%. Based on the fact that Ueda-san is setting out to the market that the current interest rate is extremely low, and also that he reiterates that he will raise rates as long as he sees development in the economy, inflation on the path. So I would say at the minimum, 1.5% terminal rate. I think we can see that. It might be a little bit more. And then going back to your JGB question, historically, the difference between 10-year JGB terminal rate somewhere around 70 to 100 basis points. So if the market is already pricing in 1.5 terminal rate, it's 2.3 right now, JGB 10. I think it's fine.
And
that's my call.
In terms of capital repatriation, it's looking pretty attractive.
Yeah.
Enough for that repatriation to happen in a significant way.
You mean what you're
from the U.S. back to Japan, treasuries to
you mean those dividend coming back to Japan or something like that? I don't see a lot of that probably. That's not happening. If that happens a little bit, I think that will the yen might be go to the 155 or so, but I don't see that much.
Let's talk about the yen. The weakness continues.
Yeah.
Should the BOJ intervene, raise rates, perhaps 3 times, as some people have suggested, to give support?
Yeah. I would say you are right. So, if the terminal rate should be 1.5, there's another 3 times, right? So I think they should do. Maybe they can do 1 time 50 basis point. I won't. I can expect that too. I think. I kind of. Yeah.
Do you see the first move of the 3 being before June, July?
I would say the next opportunity would be April. So he can see how the corporate CEOs will react in reality to wage increase. And if he confirms that there's a significant wage increase, I think that he can confirm that in somewhere around March, April. April can be the case.
And if the BOJ does move then, how much support, what yen level do you think we will see? Yeah,
I would say somewhere, the range will be somewhere between 145 to 155. Yeah. The market is already pricing in 3 times already, probably. That's what I think, yeah.
How are you assessing the outlook for your business?
I think, so even last year we talked about this, but we are concentrating our business into 4 areas. And those areas are doing fine. Those are mass retail in Japan, asset management, wealth management in Japan, supporting the growth of Japanese corporates, and our global CI business. And we have seen a lot of significant progress in many areas. For example, in the global CIB business, we purchased Green Hill is fully integrated already. We purchased a European firm called Augusta, and we purchased an Indian firm called Aventus. And these firms will be the catalyst for our global collaboration around the regions. And this will be our next growth part. And last year, I think I said that our target will be somewhere around, for fiscal year 27, after-tax profit 1.1 trillion, ROE 10%, and then PBR somewhere around 1.5. I think we're very close to that already. So we're working on revising that target for fiscal year 28, and our gut feeling is that exclusive of the rate hikes that can be expected, after tax 1.5, range of 1.4 to 1.5 trillion, ROE 12%, PBR maybe 1.75 to 2%. So that's
pretty ambitious.
Yeah, you have to be ambitious.
Let's talk about your European business.
Yes.
You did talk about how restructuring is done. Now you're going to be on the offensive.
Yeah.
What does that mean necessarily?
Yeah. So we have been concentrating on optimizing our organizational structure, also our return. From an organizational perspective, we moved into a universal banking structure we completed that last year. So that part is done. And we reduced certain branches to get more effectiveness. On the return side, we reduced low return assets. We exited from certain relationship that doesn't produce the right return for us. So I think it's about our time to go out in the market, chase for opportunities. And I think that the opportunities will come from leveraging on our U.S. capabilities, collaboration among the regions, and also Japanese nexus, and also Middle East will be also very interesting. Introducing investment to that region or introducing investment flows out of that region will be very interesting.
That's Mizuho Financial Group President and CEO Masahiro Kihara speaking there with Bloomberg's Haslinda Amin in Davos. Now, we also heard from the Citadel CEO Ken Griffin at Davos about this week's sell-off in Japanese government bonds. He says the heavy selling should serve as an explicit warning to US politicians to improve the nation's finances. Dealers in Tokyo described Tuesday's trading session as the most chaotic in recent memory, with the biggest moves seen since President Trump's Liberation Day tariffs last year.
I think that what happened in Japan is a very important message to the House and to the Senate. You need to get our fiscal house in order.
Well, let's get more on markets with Terri Spath, founder and CIO at Zuma Wealth. Terri, thanks so much for joining us today. Is that something that weighs on your mind as the state of US fiscal discipline?
Well, yeah, there's a lot to unpack with that. I mean, when we're looking at what has happened with yields on Japanese bonds, have just gone up, and that's, certainly makes you want to pay attention to what's driving that. And what we're asking ourselves is whether what's going on in Japan, which is important, if there's a subtle underlying pressure that's going to weave its way into the Treasury yields here in the United States. So we're paying attention to that. We think that the current administration is probably paying attention to volatility in the bond market here. But right now we're feeling pretty comfortable around what's going on in the bond market, at least here in the United States, despite the fact that the Fed has been cutting into pretty good growth, pretty low unemployment, pretty resilient inflation. So that's been lifting the bond yields here in the U.S. But in terms of that volatility that's been going on in the Japanese market, we're not seeing it here so far, and thankfully not expecting that as well.
Interesting set of circumstances you lay out there, pretty good growth, low unemployment, inflation coming back to target. It sounds like the Fed doesn't need to ease. Do you think there might be a few recalculations in 2026?
Well, it'll be interesting to see. I think that the trend for interest rates, at least in terms of what the Fed controls on the shorter end of the curve, is certainly to the downside, and meaning cuts in interest rates throughout the course of this year. I think there's different ways to interpret when a cut needs to be made. We're certainly comfortable with that, but you can make the case that, it's a decent economy. We don't need interest rate cuts, but we fully expect, and the market does too, that we're going to see interest rate cuts here in the U.S. And that's going to be a tailwind, along with a number of other tailwinds for risk assets here in the U.S. That's just one, prong for why we're constructive for the U.S. stock market is that we do expect interest rates to continue to decline within a strong U.S. economy.
Well, assets everywhere caught a tailwind today from this cooling of the rhetoric around Greenland between President Trump and European leaders as well. Do you think the market played a role here in terms of dialing back those threats as well? Did we see the taco trade in action?
You mean the fact that that Trump backed off a little bit on the talk around Greenland, I think is what you're asking. And
yes.
I think our view, and we continue to say this, is to always take Trump seriously, but not necessarily to take him literally. Meaning, he says he wants control of Greenland, take that very seriously, but not literally how he's going to go about and do it. So I think that, what we've consistently seen the current administration do is use tariffs and the threat of tariffs as a negotiating tool, not necessarily as a policy tool. And we've seen that over and over again. I was a little surprised to see the market sell off as much as it did yesterday, because this was a game plan that we saw in March or April last year when the Trump administration came out with very large tariffs around the world. We didn't know how that was going to play out, but now we kind of have seen that play out previously. And so it's not surprising that we saw a nice rebound today after the threats of tariffs in Europe yesterday. And I think that was used as a tool, and it seems to have been used somewhat effectively by the Trump administration to get what it's seeking in terms of Greenland and Greenland access.
So if we turn down the noise on threats, I know you're advocating a back-to-basics approach to markets. Can you tell us a little bit more about what you mean by that?
Sure. Yeah. And I do think noise is a great term, the one that you just used, because I think noise can really move markets very, very quickly, and fundamentals move markets a little bit more slowly. And it's the fundamentals that we think, always make the most sense, but particularly in a time like we've had that we're facing right now, where we've had back-to-back very strong years in the U.S. stock markets and global equity markets around the world. And it's kind of like, what are we going to do now? Like, how much higher can we go? And what we're looking at is the fact that, some of the things we've touched on, it's a low unemployment environment, low inflation. We expect deregulation to continue to benefit a lot of corporations here in the U.S., lower taxes. In many ways, it's a little bit of a Goldilocks environment for many companies. And the fact that a few names in particular got a lot of attention and really pulled the markets over the past year or two, we can see a broadening out in the markets because of those fundamentals that I just mentioned. And I think that's a thesis that the markets are increasingly embracing as well. So to be clear, we're very constructive on kind of the high growth names that have driven the stock market over the past year or two, but that broadening out to that lower valuation, meaning the cheaper names that are out there, a more balanced approach to U.S. stocks, a more balanced approach to global exposure, including Japan, we think makes a lot of sense for investors in the coming 12 months. And that's what we advocate for when we say get back to basics. Like, there's so much out there that on a relative basis looks really good right now.
Well, when you're talking about those stars of the rally that we've had so far, those really big names, I'm presuming you're talking about those big tech names, and I'm wondering where you think we're at in terms of this AI story. Are we getting close to exhaustion, or are we closer to the start of the story than the end?
Well, I mean, I think we're definitely at the start of a story in terms of what AI and the potential for it and how it's going to be incorporated globally. I don't even think most of us can begin to comprehend how expansive that can be and how much productivity that can add and how much just change in a positive way for investors. What we wince at sometimes is the valuations for the largest growth stocks and the ones with the most AI sort of incorporated into their name. So that's what we mean when we say we want to have a more balanced, a more back to basics approach, is because just holding a few AI stocks that can be so volatile and are priced at nosebleed types of levels just isn't a great way to position for 2026 when there's so much opportunity, so many great fundamentals out there, and so much opportunity at lower valuations. So to be very clear, we still like growth, we still like tech, we still think there's plenty of room to go in the sort of AI expansion globally, but we think you can outperform by making sure that you have exposure to so much more right now globally, as well as just, value stocks versus growth stocks, small stocks versus the largest ones, international stocks versus the US. So that's what we think makes the most sense going into this new year.
Terri, before we let you go, just want to quickly get your thoughts on gold as well, which has had a stunning year and, according to Goldman Sachs, may not be done yet. Of course, gold's an asset that doesn't pay you anything until you sell it. So the key question is, when do you do that?
When do you do it? Yeah, absolutely. Gold has been the shiny trade of 2025, even more so than some of those AI stocks that we were talking about. For us, gold is a trade. It's never an allocation, meaning it's never a long-term position. So we very much rely on technicals to help us determine when's a good time to hold gold, when's a good time to buy it, when to sell it. Right now, it's absolutely still at a buy level, meaning it's above a 50-day moving average. It's still below a 75 RSI. We still think there's room to run, but if it breaches that RSI of 75 level, you can kick it out. You'll be able to buy it back again at a lower level. So that's how we're positioning right now for gold.
All right, Terri Spath, founder and CIO of Zuma Wealth. Thank you very much for your time today. Still to come, India's plans for more eyes in the skies, with dozens of new spy satellites to cover blind spots in its security surveillance. And this follows last year's conflict with Pakistan. More details of this next. This is Bloomberg. Welcome back. You're watching Insight. Let's take a look at how Indian markets are tracking a few minutes after the open. It's pretty much a risk-on day across the Asia-Pacific after tensions relaxed around Greenland. We're still waiting on details of that framework deal, though. But for now, the Sensex better by 2/3%. The Nifty Bank Index better by almost 1%. Now, we've still got the Indian rupee, though, very, very weak, 91.54, around those record lows that we hit on Wednesday. Now, a few stocks that we're watching in India. Reliance has resumed Russian crude buying after a sanctions pause. So it's ordered some non-sanctioned Russian crude for delivery in February and March. This is according to people familiar with the matter. The barrel's apparently very attractively priced. Reliance better by about 0.5%. Eternal stocks doing well also. This is after the restaurant guide and food ordering platform saw its delivery unit turn profitable. So that news has been welcomed warmly by the market. And Dr. Reddy's as well. This is an Ozempic story. Better by 4.3%. Dr. Reddy's Laboratories planning to launch a generic version of the Ozempic drug in March after the drug's patent expiry. So Dr. Reddy's better by 4.5%. Let's stick with India, and Bloomberg has learned that New Delhi plans to launch more than 50 spy satellites and add nighttime imaging to enhance its national security capabilities. Our sources say this comes after last year's border conflict with Pakistan exposed surveillance blind spots. Let's get to our India infrastructure reporter, Mihir Mishra now. So, Mihir, what are India's plans on beefing up space presence?
Hi, good morning. So India's plans are not just have multiple elements to it. So the first element is to have as many satellites in orbit to be able to monitor areas of interest more frequently than they are able to do today. The plan also has an element to have better technology on these satellites, which includes having nighttime surveillance capabilities to be able to where satellites can talk to each other to be able to transfer data from one satellite to another. Then the third element is to have as many ground stations as possible. There are areas that they are looking at. So they are looking at areas in the Middle East, Southeast Asia, and also in Scandinavian countries. These are all part of the plan to bolster India's space capabilities to be able to monitor areas of interest in India's neighborhood more frequently than they are able to do today.
So what did New Delhi learn from the conflict with Pakistan last May?
Yeah, so India-Pakistan conflict last May was probably the first conflict where space assets were used as extensively as it was used during that period. While India was using its satellites to monitor places of interest in Pakistan, there were also ISRO, which is the state India Space Research Organization. They were also helping with monitoring all that data, processing all that data. India also had to buy a lot of data from US-based startup companies. Yeah, and so the learning was that India needs to have more and more assets in the orbit.
So can you tell us about the agencies that are going to be involved in boosting India's surveillance and the timelines for this new security push?
Yeah, so while the timelines are for the first 50 launches are about 24 months, but there is a sense of urgency within the system, and the plan is to make it possible as soon as possible. There is an urgency to kind of deliver as early as possible and not just stick to timelines. So there is an urgency to do it before the timelines as well. But the bigger problem is that India needs more and more satellites. And this is probably the first time where not just military, but military, ISRO, and also the private sector has been working together as closely as they are in this case. They have never worked as closely before.
All right, Bloomberg India infrastructure reporter Mihir Mishra there. Still to come, we're going to talk to ARK Invest's chief futurist about their big ideas report for their outlook on AI, robotics, digital currencies and space exploration. Brett Winton's going to be joining us live in just a moment. Plus, we'll have more big interviews out of Davos, including the JP CEO Jamie Dimon, President Trump's special envoy Steve Witkoff and Trade Representative Jamison Greer. More to come in our next hour of Insight. This is Bloomberg.
This is the largest infrastructure build-out in human history. That's going to create a lot of jobs, and it's wonderful that the jobs are related to tradecraft, and we're going to have plumbers and electricians and construction and steel workers and network technicians and people who install and fit out the equipment, and all of these jobs. In the United States, we're seeing quite a significant boom in this area. Salaries have gone up, nearly doubled, and so we're talking about six-figure salaries for people who are building chip factories or computer factories.
Welcome back. You're watching Insight. That was, of course, Nvidia CEO Jensen Huang speaking there at Davos on how AI could create job opportunities for humans. The AI theme and focus for Asian markets today. South Korea's stock benchmark topping the 5,000-point target set by President Lee Jae-myung, and that is fueled by AI-driven demand in the tech-heavy market, aided by easing volatility around US-Europe tensions as well. So that's probably the primary reason you're seeing so much green on that screen at the moment. Broad-based rally after the rhetoric and the tension really started to cool down around that Greenland question. President Trump saying there's a framework for a deal there. We don't know what it is, but that's enough information for markets to decide, well, risk is back on. We see normalization around the yield curve in Japan. One other immutable truth of markets at the moment is a weak rupee. That continues to soften, 91.53 at the moment. The gold price as well hovering around record highs, and we've got Goldman Sachs lifting its year-end target for gold to 5,400 an ounce. So perhaps that rally not quite done yet. But let's talk about the other big rally that we're seeing today, and that's on the Kospi. Let's get to Garfield Reynolds, who leads our Markets Live Asia coverage. And Garfield, to crack that 5,000 level that President Lee was looking for, where are we going next?
Oh, well, I wouldn't want to go, naming round number targets, not being a politician. But, the only way does seem to be up for the Kospi. I mean, yesterday's extreme volatility in the equities outlook managed to finally end its winning streak at I think it was 12 days, so it was one short of the longest for the gauge on record. But then as soon as that went away, it's gone back to rallying. And part of that is the AI optimism. We saw Huang. We also had OpenAI doing a funding round in Saudi Arabia, another increase in potential valuation. And the Kospi is the current biggest single beneficiary of that boom because, for one thing, it's playing catch up. It's got actually still pretty reasonable valuations, so it's attractive on that basis. It's got distance from those US-EU tensions that we were talking about, and it has a broader range of AI-exposed tech companies than Taiwan does, or almost anywhere else. So Samsung and Hynix on, yes, they're involved in sort of straight chips, especially Hynix in chip manufacturing, but you've also got memory chips, other sorts of chips, and broader out the general tech universe. So that's got the Kospi setting off its heading. It might top October as its best month since 2001. The one lingering concern is it's gone up at such a frantic pace. At some stage, that has to slow down. I was looking at it halfway through this month. It was on pace for a 1,500% gain for the year. I don't think that's going to happen. So at some stage, it's going to slow down. When it does, you might well get some macro tourists looking for where the gains are to be found now.
I think it's worth talking about one of the stories that's gone away, and you mentioned this just before we went on air, is what happened to the JGB story. I mean, normality seems to have returned there, but we've got a Bank of Japan meeting coming up. Could we expect to hear some commentary about this?
Well, I think the Bank of Japan is going to play things pretty close to its chest. It's probably very happy that that moment of severe doubt that went through the JGB market on Tuesday. Yeah, the days seem to run together a bit this week. But on Tuesday, after a 20-year sale that, in some ways was the worst of all possible setups, in that it seemed to be reasonable in terms of demand levels. It went off kind of smoothly, but then it was clear that there was some discontent, under the hood, and you just had a buyer's strike in the latter half of the day. Now, what's happened is there's been a lack of any sort of follow through on the potential fiscal concerns, and there's been enough, investors who are going, well, at these levels, these yields do look attractive to buy and hold. But you still have lots of potential speed bumps coming up. We've got a 40-year auction next week that could be extremely tough given what's been going on. So JGBs are calm for the moment, just the way the yen is calm for the moment, but it's a pretty fragile sort of calm.
All right, Garfield Reynolds, who leads our Markets Live Asia coverage. Well, joining us now is Brett Winton, Chief Futurist at ARK Invest. ARK's a global asset manager specialising in thematic investing and disruptive innovation. Brett, thanks so much for joining us today. This is the 10th edition, I believe, of your Big Ideas report. Could you maybe start by giving us the executive summary of the big ideas, and we'll dig into some of the themes from there.
Well, there's so many big ideas, it's hard to summarize it very, shortly. But I will say that I agree with Jensen in the quote. This is the largest investment cycle of all time, we think in history, larger even than the railroad build out in the late 1800s, driven by AI, and the acceleration in AI is accelerating all of the 5 innovation platforms that we focus on, whether it be, robotics, energy storage, AI itself, autonomous mobility, multi-omics, and public blockchains. So there's a simultaneous acceleration in technology that is prompting and catalyzing the largest investment cycle of all time, and that we think is going to change the trajectory of global GDP growth. In fact, we think global GDP growth is going to be in the high single digits over the course of the latter half of this decade because of the investment dollars pushed into these technologies and because of the amazing yield you're going to get off of those investment dollars. And it's going to change people's lives. We think that disruptive innovation is going to be the majority of equity market cap by the end of the decade. And actually, non-innovation exposed stocks could moderately decline. So imagine an economic boom and a set of stocks that is compounding marvelously. And if you're in the wrong exposures, you're flat to down. So we think that people need to get on board with innovation, yet post haste because of the business cycle that's going to come.
Well, we heard from Jensen Huang at Davos. He's talking about the trillions more needed for AI, jobs for everyone, plumbers, electricians, blue-collar trades as well as this gets built out. What are you anticipating in the coming years in terms of CapEx, and what are the risks to that outlook?
Yeah, we think that AI compute itself will build up to in excess of $1 trillion in spend by 2030, and the layering on of AI space compute could meaningfully contribute more than that. One way to think about it is the world is actually starving for compute power right now. The major foundation model providers like Anthropic, xAI, and OpenAI, all of which are in our venture strategy, are having to turn down business because they're not able to provide people with the tokens that they need to get their jobs done. If you go on X, everybody's posting about how they're out of Claude credits because Claude Code is using them all, and they want more, but Anthropic can't give them more because they don't have the compute data centers in order to supply them. And so we think in core AI is enough to easily justify the $1 trillion+ in investment that is to come, and humanoid robots and multi-omics and these other categories of innovation also will use that compute to good effect. So we need it to train our humanoid robots. We need it for our robo-taxis. We think the demand elasticity curve for AI compute is really stretches literally into the solar system. And so we think it's going to be a remarkable cycle.
Okay, so no short of demand for compute, but at the same time, connected to that, no shortage of demand for energy either, because this is going to potentially slow things down, and maybe does AI potentially hold the solution to that problem?
Yeah, well, I think that motivating energy in to supply this AI compute is an important factor, and it's actually, within the energy storage innovation platform, distributed energy is an important node. So modular nukes are going to come on towards the latter half of this decade. Solar is delivering all of the marginal growth in energy supply. And underappreciated is, these AI compute systems, because you're developing power behind the meter, it's important that you have the batteries attached in order to load balance that power for your chips. So I do think there's going to be a lot of execution that needs to happen to get these data centers built terrestrially, which is why Elon Musk is saying, well, hey, I can navigate around that thicket of complications by sending computers into space. And we actually think that underwrites quite well. We think it's going to be cost competitive and actually cost superior at the Starship launch vehicle's economics. And so it gives him an opportunity to basically turn the dial to 11 in terms of putting compute into the world. And for the ultimate opportunity that we anticipate, we think that all of that compute will be put to great use for people, businesses, and providing amazing services.
Yeah, we might even see a SpaceX listing soon, and I'm wondering how you see that potentially accelerating Starship development, and if there's any competitors on the horizon in terms of reusable rockets.
Yes, I mean, SpaceX has at least a decade lead on the rest of the field. There are, widely reported rumors that they're going to list. It would not surprise us if they IPO'd this year. It is the largest position in our venture strategy, and so we think we'd be very supportive of a listing. The reason they're going to list is because this AI compute opportunity, it could increase the expected volume of rockets they need to launch by 10, maybe as much as 60x. And so they need a lot more rockets and a lot more launch towers in order to service this AI market. And so a listing would make sense for them within that context. And it's not just SpaceX. If you look across the landscape, there's roughly $7 trillion in market cap attributable to venture capital unicorns. a lot of them, I think, are going to come to market because we're in an age where delivering technological magic requires a lot of capital. It requires those data centers. It requires training big models. And then that capital can be put to good use servicing customers. So we think that these businesses, a lot of them will end up in the public portfolios, probably including our actively managed ETFs, ARKK and et al.
Do you anticipate more competition on the way as well for the likes of Nvidia, perhaps especially out of China? We've got to remember it's about a year ago to the day that we had that DeepSeek moment that stunned everybody.
Yeah, I think that it seems likely that we'll end in at least a bipolar world where there will be a set of more China-aligned countries that use Chinese AI systems, whereas kind of Western markets will, frankly, be skeptical of what they can promise in terms of privacy and protection of data, and so we'll stick with the U.S. providers. On the chip side, Nvidia is an interesting spot. Their gross profitability is a giant flashing sign to markets, like, come get us. And there are vertically integrated competitors, including Tesla, which is going to produce chips for SpaceX, including Amazon has its vertically integrated chips. OpenAI is reputedly working with Broadcom to develop its own chip stack, and of course Google has its TPUs, and not to mention AMD, which has a competitive set of chips for a certain class of problems. I think the demand for chips is so extreme that I think there's room for multiple players in the market. And I mean, you saw Nvidia acqui-hired Grok, GROQ, also in our venture fund, venture strategy, full disclosure, and I think there's probably going to be continued competitive positioning in that space. Net, I don't think that Nvidia's gross margins can stay at the spot that they are perpetually. It's still a cyclical business, and I think it'll be an exciting 5 years to come.
Is this gap between the supply and demand for chips and compute as well one of the reasons that we're not seeing autonomous vehicles being delivered on quite the timeline that we might have anticipated, or is something else going on here? What's your outlook for that space?
Well, I think robotaxis are going to be a remarkable innovation once they deliver in a scalable way. We think that's going to happen on Tesla's platform. And, over the course of the decade, that enterprise, that platform of delivering robotaxi services could grow to be worth $30 trillion collectively, global, across all providers. It does require a lot of compute to do it on an AI-first basis. And so, Waymo's service, which I use all the time, it's here in Los Angeles, they have kind of a hybrid solution and a much more expensive set of sensors, so it's hard for them to scale their platform. We think that Tesla delivering full stack autonomous on $35,000 cars, that literally you can buy the car and pay $8,000 extra, and you get a perpetual chauffeur for you once they turn on full self-driving, is really a remarkable achievement, and it'll allow the business to scale. A way to think about it is, for $1 a mile, we think the market size for ride-hail increases by more than 10x, and that's where Tesla is going to be able to deliver the service. So you're going to have a massive expansion in the number of people that are just counting on this for their daily drive around town, because it's as expensive as buying a new car.
Can you tell us a little bit about how investors should be playing some of these calls in your report? Because, okay, if we take self-driving cars, for example, I know Baidu's an ARK investment favorite. Is that one tangent people could go along?
Sure. I mean, clearly, we think Tesla is the leader in Western markets in robotaxi. We think Baidu has, both on the AI side and for its autonomous vehicle side, has an interesting angle on the market. I think it's likely that as the market develops, there will be natural geographic monopolies where even a superior technology will be forced to or incentivized to partner with a local provider in order to kind of get the leeway to enter into that market. So I think that's likely the way it will play out. And I do think that the Chinese manufacturers, because of the volume of vehicles they put out, because of, really their amazing ability to quickly scale new models and, new sets of sensors onto their vehicle, have a meaningful ability to deliver value here within autonomous mobility. Generally, across the space, I'd say, our actively managed ETFs, we think, provide efficient exposure to disruptive innovation, not just in robotaxi, not just in core AI, but also in multiomics, where the AI is going to, we think, meaningfully decrease the cost to discover and deliver drugs to market, and so increase return on R&D. So we think a mix of technologies in a portfolio is important, given that they take 3 steps forward and 1 step back. There is inherent volatility in innovation investing, and we think it's going to be a remarkable second half of the decade.
All right, Brett Winton, Chief Futurist at ARK Invest. Thanks so much for joining us today. Just want to get you across some action in the JGB market. Interesting to see. Japan's 30-year bond yield has fallen 10 basis points, now sitting at 3.62%. The 20-year bond yield also slipping 7 basis points. That's now down at 3.185. So after a fairly dramatic week, normality appears to be returning to the curve in Japan, for now at least. Coming up on Insight, President Trump's special envoy heading to Russia for more talks on finding a path to peace in Ukraine. Our conversation from Davos is next. This is Bloomberg.
I think the Board of Peace will be the most prestigious board ever, and it's going to get a lot of work done that the United Nations should have done. And we'll work with the United Nations, but the Board of Peace is going to be special. You're going to have peace.
Welcome back. You're watching Insight. President Trump there saying that his proposed Board of Peace will do the work that the UN was supposed to do. China is among the many nations that have received the invitation to sign on. Beijing has not indicated whether it will join or not, but says the board should operate under the auspices of the UN.
China has been committed to true multilateralism. No matter how the international landscape changes, China will firmly uphold the international system with the United Nations at its core, the international order based on international law, and the basic norms of international relations based on the purposes and principles of the UN Charter.
Well, speaking to Bloomberg in Davos, U.S. Special Envoy Steve Witkoff told us that several countries have actually agreed to join President Trump's so-called Board of Peace for Gaza.
We've got 20 or maybe 25 leaders who have already said yes. This is not such an easy place to get to. They've already said yes. I think you're going to see overwhelming response. We had many people who we weren't sure if they were going to even want to get an invitation. Now they're calling up for invitations. So everyone wants to be a part of this. What we're going to do here, what the president is going to do here, will be it'll be game-changing for the world.
How have you pushed the ball forward when it comes to Ukraine talks here? I know Kirill Dmitriev was here on the ground.
Yes.
He was tweeting about how the talks went well.
He's a tweeter.
Yeah, he is. He follows me. Can you give us some insight into, if the talks are going well, where are we at this moment? What is the state of play?
Well, the Ukrainians have said that we're 90% done. And I agree with them. In fact, I think that we've made even more significant improvement over this past weekend. We were meeting with Kirill Butinov, who is, of course, their new vice president, ran military intelligence for them, their head of the parliament, David, and with Rustem Umerov. And we made even more progress during those meetings in Miami this past week. I'll be with them tonight. And I think that, and then I'm going to Moscow with Jared. All of these discussions are...
When are you going to Moscow?
Jared and I will leave Thursday night and arrive in Moscow late at night and then go over to the UAE afterwards for working groups.
So do you think we are close to the final 10% of this deal? Do you think this will get done in the next few weeks?
The final 10%, I don't know about the next few weeks, but I know we've made more progress in the last 6 or 7 weeks since Geneva than we've made, according to the Ukrainians now. I'm going to use their, what they say. According to the Ukrainians, more progress than in the last 3 or 4 years.
We've seen, though, Russia continue their attacks, especially on critical infrastructure, most recently energy infrastructure, leaving thousands, maybe millions of Ukrainians without power, without heat. Do you think Putin is truly here for a peace deal?
Well, first of all, they're in a war, and so they're shooting at each other, and we don't condone that. I mean, we think it's unfortunate. That's why the president and me with Jared at the president's direction, are working so hard for the peace. We hope that'll occur. We think people, you're right, are suffering on both sides. It's cold there, and not to have heat is terrible. And we've got to correct all of these things. But a peace deal corrects it. And the president is focused on that peace deal. It's a very, very important part of his agenda from a foreign policy standpoint.
But do you think Putin is there, or is he just dragging negotiations on for the sake of it?
I think that they've asked for the meeting. The Russians have invited us to come, and that's a significant statement from them. And Kirill was here yesterday and working on this with us. So I think everybody is embedded in the process and wants to see a peace deal happen.
If we do not get to a peace deal, what does the toolkit look like in terms of potentially more punishments on Russia?
Well, we've sanctioned them quite a bit. And I'm not sure what the president's game plan would be if it doesn't happen. I think if it doesn't happen, a lot depends on who he thinks is responsible for it not happening. Right now, we have people working together. We're trying to build consensus. We're trying to build unanimity of opinion. We've sent an invitation out to President Putin to join the Board of Peace. The same thing with President Zelensky. So let's hope. I want to choose to be an optimist here.
That's U.S. Special Envoy Steve Witkoff speaking with Bloomberg's Anne-Marie Jourdain in Davos. Still ahead on Insight, Thailand's finance minister tells us he's concerned over the baht surge to a 5-year high. That conversation in a moment. This is Bloomberg. Welcome back. You're watching Insight. The US Congress is one step closer to gaining the authority to review AI chip sales to China. A House committee focused on foreign affairs approved bipartisan legislation which would require the administration to notify Congress of advanced AI chip sales. And that would give lawmakers the power to review and block export licenses to China and other adversaries. The legislation is a response to President Trump's decision to ease export controls on China, which drew objections from national security hawks in Congress. Well, US Trade Representative Jamison Greer says he wants open dialogue with Congress about their efforts to increase oversight of advanced AI chip exports to China. Speaking to us in Davos, Greer also discussed America's evolving export control policy.
The United States export control policy has always been fluid. That's how it is supposed to work. As technologies advance, older technologies become less sensitive and they can be shipped overseas. And so in the Trump administration, there's been an ongoing dialogue within the administration, with members of Congress, with industry, with consumers of chips, with producers of chips, to figure out what's the right balance for national security and commercial interests. And the president himself has made some of these decisions.
What do you make of Congressman Brian Mast's bill, which is basically saying that we need to regulate, Congress should be regulating these chips?
Well, Congress passed a law, the Export Control Reform Act back in 2018, that updated and gave new legal authorities for export controls. The Commerce Department has authority to implement those regulations. I mean, my view is if Congress has a view on this and they want to, take a stronger approach and take a more hands-on approach, they can do that. They can pass a law. Congress is notorious for proposing laws and never getting them passed. To me, I think it's important that we have a conversation with Congress, regardless of whether they pass a law or not, on their views. I think all of that goes into these conversations. And remember, when you see something that says, we're shipping these chips to China, every time that happens, whatever company wants to make that shipment, they have to make an application to the Department of Commerce. And on a case-by-case basis, the Commerce Department looks at it. They check who the end users are. They check what the security measures are. They check, who's going to be touching it along the way, and they make a decision based on that.
US Trade Representative Jamison Greer there speaking with Bloomberg's Anne-Marie Jourdain in Davos. Here's a quick look at where markets stand. Asian markets marching higher today as President Trump backs off on his tariff threats against European partners over Greenland. We're also keeping a close watch on Korea's benchmark Kospi index after it touched the 5,000 level for the first time earlier today. And the Thai baht in focus as it underperforms all its Asian peers in tandem with a decline in gold. Now, Thailand's top economic officials have been sounding the alarm over the currency's recent jump to a 5-year high. Deputy Prime Minister and Finance Minister Ekniti Nitinthamprapas spoke to us at Davos about what's driving the surge and why he's concerned.
We are very big concerns because Thailand is small open economies and we are in net export countries. So baht appreciation would affect our economies. So we are in big concerns. So I think we have to look into details on what sorts of baht appreciations.
Can you quantify the impact on the economy right now, even for tourism numbers?
Yes, definitely, because I think one baht appreciations would affect GDP by about 0.1 or 0.2. So that's overall GDP impact.
What mitigating measures can be implemented, can be adopted to limit the strength of the currency?
Yeah, in the short term, we have to look into details on the fundamentals. When we look into details, baht appreciation is coming from three factors. The first fundamental factor is definitely U.S. depreciations, so that affect all other countries. So that we cannot do anything because it's global situations. The second one is related to domestic countries. We have strong current account surplus, so that's why it's creating baht appreciations. And the last one is speculative flows. This one we need to curb it. Then I have been reported by Bank of Thailand governor that there might be some speculations related to gold transactions related to baht on the last part. That's the last part we need to curb it. And on the second part, I think for the longer terms, that's why this year what we plan to do is to promote as a year of investment. For example, my policy during the past 2 or 3 months, I'm trying to promote investment. Especially promote investment, we can induce FDI into Thailand. Definitely it's coming with the import. Import could reduce current account surplus. That should help reducing currency appreciations in the longer terms while promoting competitiveness in the long terms. For the short term, we have to talk to BOT. They have mechanisms, and we just give them some new regulations, MOF, Ministry of Finance regulations, for them to scrutinize on baht transactions related to gold transactions.
You talk about the speculative trading in gold.
Yes.
You've also talked about banning or imposing tax on it. Is it a move that you're likely to implement anytime soon?
Yeah, we are considering it. We asked the team to study, but unfortunately this is the caretaker government, so we cannot introduce tax measures at the moment. But the team at the Ministry of Finance is studying it, so waiting for the new government to come and consider it.
What is the view from the BOT in terms of what it can do to limit the rises in the baht? Might the BOT cut its rates to perhaps manage the currency?
Actually, it's because in Thailand, Bank of Thailand is very independent. So, but from perspective of economists and others, including Ministry of Finance, there's some room to cut the rates at the moment.
How much room is there to cut rates in Thailand?
So that's up to MPC.
How closely are you watching the movements of the Fed? There are expectations, of course, that the Fed will cut rates this year. Some say 3 times, 2 times, even 1.
Yes.
How much room would that give the BOT?
Yeah, because actually at the moment, BOT rates and Fed rates is different. Fed rates, they have more room than us. So we have to use multiple tools to address for baht appreciations. In my opinion, we have to do both fiscal and monetary policies. Monetary policies, we have some room to cut rates. For fiscal policy, we have to promote investment, inducing import for the longer-term competitiveness.
You talk about wanting to attract FDI.
Yes.
We see a lot of capital rotating from the U.S. to a lot of Asia. How much of the capital are you actually attracting to Thailand?
For example, last year, what I can see, I'm very surprised. FDI flows coming to Thailand quite a lot. For example, BOI incentive package applications have been increased by 93% last year, equivalent to about 14 billion US dollars. What I'm trying to do is that I'm trying to unlock investment obstacle. That's why we created so-called BOI Fast Pass. It's like the pass that speed up our investment that should help stimulating domestic economies this year while promoting competitiveness in the longer terms. Because there are industries like smart electronic, printed circuit boards, EVs, smart agricultures, and wellness, which are the niche of the Thai economies. So I think that might be related to geopolitical tensions that have been increasing. Coming to WEF at the moment, I have met with many investors. One thing I'm quite surprised why they are interested in Thailand, coming to invest in Thailand. The first reasons I got is Thailand's neutrality. That's and macroeconomic stability in Thailand. We have low inflations. We have high international reserve. Comparing to our short-term external debts, it's more than 2.5 times of short-term external debts, covering more than 10 months of imports. So economic stability is the foundation for investment in Thailand, and also investment environment. People like to come and work in Thailand, and so that's part of the reason.
That's Thailand's Deputy Prime Minister and Finance Minister speaking to Bloomberg's Haslinda Amin in Davos. Well, let's get more insights now on currency moves across Southeast Asia. As we mentioned earlier, the Thai baht is extending its drop, the biggest decline in Asia today, while the Malaysian ringgit is experiencing its most active trading period in years. Bloomberg Rates and Emerging Markets macro strategist Marcus Wong joins us now with more. So, Marcus, tell us about these movements in the Thai baht. It was getting somewhat strong, raising the concern of policymakers, but really, apart from jawboning, is there a lot they can do here?
Yeah, I know it's important to point out that the decline in the baht today was actually driven by the recall in gold prices. I mean, after there was some signs that tariffs on Europe will not be imposed. We saw the gold pull back from record highs, and this, of course, correspondingly saw a fall in the baht today, which has lagged all Asian peers. But I think over the more medium term, finance minister and BOT officials are currently worried about how the baht and gold have been quite correlated to each other. If you look at the economic situation in Thailand, numbers don't look rosy. Growth is challenged. Exports are still finding ground to rebound. While inflation is while low, it still proves a very challenging economic situation for Thailand. So, i.e., the currency is quite detached, and they're currently also worried because Thailand is quite dependent on exports. So the big question for investors out there is whether the Thai officials will be able to decorrelate gold with gold prices with the baht. Few initiatives have been announced. A punitive tax on gold. Also, efforts to essentially decouple trading of to keep the trading of the gold in dollars and to avoid conversion into the baht, as well as initiatives to discourage speculative retail trading. All these measures have have been announced, and also as the finance minister pointed out, some have have difficulty rolling up because we are in an interim government right now.
So one of the other strongest performing currencies in Southeast Asia, of course, is Malaysia's ringgit. What sort of movement are we expecting today ahead of the rate decision in Malaysia?
Well, the ringgit is largely a currency that is probably less volatile than quite a number of its peers. So I think going into the decision today is actually a largely expected rate hold decision. They've been on hold since second half of last year. If anything, I would say that the risk over the next 6 to 12 months is actually for a Bank Negara Malaysia hike instead of a cut moving forward. If you look at numbers have been very rosy, especially if compared to Thailand. Fourth quarter advanced GDP soundly beat economists' estimates. If you look at exports, it's been surging, it's doing very well. A lot of it has been, of course, riding on the AI boom. Essentially, Malaysia is quite a destination to build data centers. So quite a bit of FDI has flown into the country because of that. So all these factors have been quite a decent tailwind for the ringgit. Quite a few investors we spoke to are quite overweight on the ringgit this year. Ringgit was the top performer in 2025, and some expect this performance to continue moving forward.
And on the topic of rate decisions, Bank Indonesia, of course, held rates yesterday, citing focus on currency stability. So what are we seeing in the rupiah?
Well, I think the rupiah will be more sensitive to essentially two things, fiscal risk as well as questions over central bank autonomy. So, of course, the fiscal risk was basically over the past few weeks when, the fiscal deficit number for last year approached close to the 3% ceiling that investors closely watch. And, of course, this, negative bearish sentiment, again, accelerated, recently when, when it was announced that the BI deputy governor would be Prabowo's nephew. So investors generally love central bank autonomy, not even just for Indonesia, but of course for DM economies such as the US. So in this sense, I think there is a general jittery among investors on how this will affect the rupiah moving forward.
All right, Bloomberg rates emerging markets macro strategist Markets Wong up there. Still to come, breaking up is easy to do for Australia's opposition. The coalition splitting for the second time in less than a year. A closer look at their differences and the political fallout up next. This is Bloomberg. Welcome back. You're watching Insight. Let's take a look at how Australian assets are doing. The ASX catching the same sorts of tailwinds that we're seeing around markets more broadly, better by 0.75% as those tensions around Greenland between the US and Europe ease. A couple of idiosyncratic factors going on, though. We saw unemployment for December ticked down to 4.1%. That was unexpected. So the strong labour market in Australia really adding weight to the idea that the RBA's cutting cycle is done. The next move may even be up. We're seeing that reflected in the Aussie dollar now above 68 cents. Also heard from Fortescue and Santos today. Fortescue, of course, the pure play iron ore miner. It reported iron ore shipments for the second quarter, 50.5 million tonnes. That was an improvement on quarter. Still sees iron ore shipments between 195 million to 205 million tonnes for the year. We also heard from Santos, the oil and gas producer, saw a modest tick-up in production of 0.7%. Sales revenue, though, missing 4.94 billion. That was down more than 8% on year. Santos, of course, suffering from the weakness in oil prices that we've seen recently. Well, BHP CEO Mike Henry has praised the Trump administration for its support of the mining industry. Speaking to us in Davos, Henry also reacted to the rally in base metals, including copper.
I think it's been that pressure to find new supply that's underpinned the price escalation that we've seen, certainly in copper. So this is something we've been talking about for years. We talk about the fact that copper demand is ubiquitous, used in all walks of the economy. You layer in on top of that the energy transition, renewables, very copper intensive, and data centers. So data centers, your previous guest was talking about how energy intensive they are. That requires more copper, and yet copper is getting harder to find. Deposits are smaller, lower grade, deeper. BHP starts as the world's largest copper producer, and we've grown by 30% in the past 3 years. We have 4 big growth prospects ahead of us, including one in the US.
We've got it ready to go in Arizona, I believe. Resolution Copper. I talk about it on the show so often.
We're chomping at the bit.
What is taking so long to get that joint venture moving and get the copper out of the ground?
Look, so it's held up under a administrative injunction currently. So I can't speak highly enough of the support that we've seen from the administration. So the administration, be it Secretary Burgum, Secretary Wright, President Trump, have been very keen to get more mining and processing going in the U.S. because they understand the importance of critical mineral supply chain resilience. And of course, it would support the U.S. economy and specifically the Arizona economy as well. So we're all ready to go, but we have to let the legal process take its course.
How long has it taken? More than 10 years?
It's taken a long time.
Yeah, I mean, I guess can you just quickly put a bow on that and say, is it going to be expedited in a serious way? Could we see it in the next, say, year or two lifetime?
It's very hard to predict. We were almost there a few months ago, but it's been held up for a little bit longer. We remain optimistic that it will ultimately be a project that goes ahead. It could supply 25% of the U.S.'s copper demand for decades. So this is a pretty significant project, one of the best undeveloped copper deposits globally. And from a BHP perspective, it's but one of 4 major copper growth projects in the portfolio.
You sound like the administration has been really helping you and your business. At the same time, there's potentially more tariffs coming down the pipeline when it comes to this administration. How do you navigate that environment?
So, look, it is a more volatile, uncertain environment than it has been in the past. But from a mining sector perspective, 5 years ago, it would have been hard to get airtime for mining companies globally. There wasn't a lot of interest in mining as a sector. If anything, there was a lot of pushback on mining, where I think there's been a growing awareness of just how important metals and minerals are to the world. Continued economic growth, economic well-being of billions, energy transition, and the digital transformation. And so broad brush support now that we're seeing, certain strong support in the US, but support in other countries as well. That's something we should all welcome. But of course, there's going to be uncertainty that we need to navigate along the way. The tariffs aren't impacting BHP directly in any big way because we only have about 3% of our revenue in the US currently, but it's something we do keep an eye on.
You got to acknowledge, though, Mike, there's been a change in management in the last 10 years or so, and it was forced by investors. There was a switch from volume to value, to discipline. Is there a little bit more of a push now to get back to a bit more volume? How do you manage the discipline alongside the increased supply?
Look, so it is all about value. Now, we've been very deliberate in reshaping the BHP portfolio, and this is after a decade of being very disciplined when it comes to capital allocation. We've had license from shareholders to reshape the portfolio in a way that makes BHP more ready for the future. And a big part of that has been growth in copper and in potash, a fertilizer that's needed for sustainable agriculture. So we've been pretty successful on that front over the past number of years, and we're looking forward to executing these big growth projects ahead of us.
You got South 32. That was a spin-off of about 10 years ago.
It was simplifying the portfolio. So
the reason I'm bringing up South 32 is because I'm wondering what you'll do with the coal assets, the iron ore assets of BHP as well. Is it something you might be thinking about, some echoes of that decision back then?
So we always have to have the discipline of thinking about what the right portfolio is. But we believe that the diversified model holds value. We're running the best iron ore business, or best performing iron ore business in the world, generating strong margins. And then our growth focus is really in copper and potash. And that model allows us to have a very strong balance sheet and to fund growth through the cycle, which we see as a differentiator for us.
Well, in other news, Australia's opposition coalition has collapsed again, with its two right-wing parties splitting over support for the Labor government's crackdown on hate speech. For more details, let's bring in Bloomberg Australia economist and government reporter James Mager. So, James, two splits in less than a year. The first one lasted just 8 days. Might this one last a little bit longer, and what precipitated it?
All indications are that this is going to last a lot longer than 8 days. The leader of the minor party, in what had been the coalition, said that they can no longer work under the current leader of the opposition, Susan Ley. So, if that holds true, until she is replaced, there's no chance of the two parties getting back together. And I think, what really precipitated this is the underlying tensions you saw last year when they collapsed the first time, which was over policy, over things like net zero, moving to reduce carbon emissions, and then the debate here in Canberra over the last few days about how to deal with the aftermath of the Bondi attack. The National Party, which has now left the coalition, was some of the senators and then most of the party members did not want to vote for the anti-hate legislation because they thought that it was rushed, and they also said that it infringes too much on freedoms of speech, and the Liberal Party decided they were going to vote for it, and that has precipitated this split. But there's also very clearly a lot of tension between the two parties as well, and there is basically no trust between the two now. So without a change in leadership of one or both parties, it's hard to see how they could get back together anytime soon.
Well, James, on that note, how safe is Susan Lee in her job? Because there has been leadership speculation around her for quite some time now.
I mean, I wouldn't want to be her starting the year with this happening under your watch. There is a lot of leadership speculation, and there are a lot of people who are contending or who have said they want to be the leader of her party. So it looks like that position is becoming more and more untenable, as the National Party said that the coalition was untenable. But the thing to remember here is that these two parties were massively beaten at the last election, and even if they are to get back together, it's going to be very difficult for them to rebuild rebuild voter support, especially as they're losing, or they're, the One Nation Party, which is a very hard right party here in Australia and anti-immigrant, is taking on, away more and more of the voters on the right of politics. And so, whoever ends up being the leader of the Liberal Party going forward, or the leader of the National Party going forward, is going to have a lot of work, not only to shore up or to recreate a coalition, but also then to win back voters, especially from the right.
All right, Australia economy and government reporter James Major there in Canberra. Thank you. Before we go, here's a look at tomorrow's show. Japan's upcoming snap election adding market pressure might prompt the BOJ to take a more cautious stance. Mundi's Hiromi Ishara is going to give us her insights. And that is it for Insight. Horizons Middle East and Africa are up next.